More than just business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I am Agam Vakil. First, the headlines. Asian markets opened lower following a relatively quiet overnight trading session as the US markets had been closed for the Thanksgiving holiday. But the president approves the ordinance to amend the Insolvency and Bankruptcy Code, and promoters of insolvent firms will be barred from the bidding process. And adjusted gross revenue in the second quarter grew for the first time after a year, but the top three operators lose out on gains. And the Supreme Court orders a fresh auction of the Ambi Valley project, appoints an observer to oversee the entire process. Let's move in and take a look at the Asian markets. Now, while the Nikkei has continued to consolidate over the previous few sessions, that is also the case today. As you can see, looking at a decline of just much 0.4% for now. At levels of 22,400, we will be keeping an eye on as to how the rest of the Asian markets also open and trade. But we also have Darshan Mehta here with us to give us an idea of how trade had panned out yesterday and what we can expect today. Darshan.
Good morning, Agam. Not any cues coming in from the US markets given the fact that they were shut. The SGX Nifty is indicating a very muted open. So still, over the past few days, Nifty is gained for the sixth session, but it's unable to capture the 10,400 mark in trade. So Nifty futures probably will open flat in trade. As far as the ADRs are concerned, US markets were shut for holidays. They'll be shut today also. So for the next 2 days, you won't get any kind of cues that's coming in from the ADR market. Crude is trading with a positive bias in morning trade. Even overnight, crude was doing extremely well. WTI did extremely well. So the WTI was about the $63.50 mark, ended up almost close to 0.5% overnight. Now crude is headed for the sixth weekly advance in the last 7 weeks. So there is enough traction that is happening as far as crude is concerned. As far as commodities is concerned, positive close for the base metals on the LME. Only one metal didn't do well. Apart from it, nickel was up close to 1%. Zinc and aluminium were up almost 0.3%. Lead ends with a negative bias. So lead was the only one that ended with a negative bias. Even COMEX copper is currently trading with a positive bias in trade currently. As far as the other metals in China is concerned, rubber is trading higher by almost 0.6%. Steel is down almost 0.5%. The other base metals are trading rather muted in China currently. As far as gold is concerned, gold trades with a negative bias for the second session, but it's very muted, negative cues that are coming in for gold at this point of time. Fund flows, FI has bought in 73 crores in the cash market. This is the NSE provisional data that will come in. And DI has bought in 222 crores. So over the past few days, we're seeing that DIs again are becoming aggressive in the market. So FIIs from a net buy of 17,000 crores, they've moved down to 15,000 crores. And DIs from a net buy of 5,000 crores a few days ago has moved to 7,200 crores. So overall, close to $3 billion have already come in. Nifty recovers from the lows of the day to end with a positive bias, with just up 6 points, but nevertheless a positive close and sixth straight day of gain for the Nifty. Oil, IT stocks gain, metal and pharma stocks, the weakness continues in those sectors. As far as the entire setup is concerned, Nifty was extremely muted. Again, for the second day in a row, Reliance and Infosys have been contributing significantly. Sun Pharma moved in the later half of the trade, but negligible contributor. The HDFC Twins and L&T were the ones that contributed negatively as far as the Nifty is concerned.
So Darshan, as you said that the SGX Nifty is indicating another day of consolidation, at least in the opening. What are the FNOQs indicating?
The FNOQs indicates that in and around the 10,400 mark is where positions are being built. Overall, the Nifty yesterday ended absolutely flat. There was short covering that was seen on the Nifty. The open interest was down almost 2.5%. Same was the case as far as the Bank Nifty was concerned, because the Bank Nifty was down in trade, so a little bit of long unwinding was seen on the Bank Nifty. Now, the VIX has come off significantly. It's down almost 1%. So it's down from the highs of 14, 50, 15 that we'd seen recently. Now, the Nifty PCR is moving higher. There is significant amount of put writing that is happening, indicating there is very optimism as far as the Nifty is concerned. So 1.35. The Bank Nifty PCR continues to be one below the 1 level. Now, look at where the put writing is happening. 10,200 and 10,300 is where the maximum put writing is currently happening, and 10,600 is where call writers took position. So that's where the general consensus is. 10,400. So on the lower side, you're seeing that 10,200, 300. Seeing open interest build up, and at higher level 10,500, 600 is where the support, where the resistance is actually coming in. So that's the cue that's we're getting in as far as the open interest change is concerned. As far as the stocks in the F&O ban is concerned, Fortis Healthcare enters the ban, Jet Airways enters the ban, and what goes out is Indocount Industries. So Indocount is out of the ban. It was up almost 2.3% in trade. So that's the counters we'll watch out for. SRF has been on a tear. It moved up on high open interest build up of 8%. The counter was up almost 5%. So certainly as a trend, that is the counter that you have to watch out for. And Apollo Tyres saw short covering that came in. Open interest was down 11%. The counter was up 2%. If you look at the insider trades that happening coming on BTL, it's a group company, PTL Enterprises, which is also a listed company, over the past few days has been continuously accumulating Apollo Tyres. So that is the other counter that I'll watch out for.
Thanks for that, Darshan. We will be watching out for a lot of those cues, but we will move in and we'll take stock of the big news that we've had. President Ramnath Kovind has approved the ordinance to amend the Insolvency and Bankruptcy Code, and promoters of large stressed accounts may no longer be allowed to bid for their own assets. Payaswini Upadhyay and Vishwanath Nair join in to explain to us about the big changes in this code and perhaps the impact on insolvency cases. Payaswini, first we will come to you as you file this report. Give us all the details on whether or not the promoters of existing insolvent assets could place bids over to you.
So basically, I'm going to tell you now who all are not eligible to or don't qualify as a resolution professional, or rather resolution applicant. Anybody who is an undischarged insolvent, anybody who has been tagged as a willful defaulter by the RBI, and this is the interesting one which we should focus on, any account which has been classified as an NPA for a year or more, and there is a payment failure of all overdue amounts with interest before submission of the resolution plan. I say we should focus on this is because if from now until there is time to submit a resolution plan, the promoters or the existing promoters pay this overdue amount with interest, they will be allowed to submit a resolution plan. Coming to the fourth ineligibility criteria, anybody who's been convicted for an offence which is punishable for over 2 years of imprisonment, any disqualified director under Companies Act 2013, anybody who has been barred by the SEBI, the markets regulator, from capital markets, anybody who has indulged in preferential, undervalued or fraudulent transaction as per the NCLT or any judicial order, and anybody who has executed or given an enforceable guarantee to the creditor in respect of a corporate debtor. So for instance, if X is the corporate debtor on the company facing insolvency proceeding, and SBI has given the promoter an enforceable guarantee in terms of that corporate debtor, and that guarantee has not been executed, even that X person cannot be a resolution applicant. And finally, any connected person, and that connected person has also been detailed, and those people can also not submit a bid for an insolvent company.
And now coming to you, Vishwanath, you've spoken to a whole host of bankers out there to understand the amendments that have taken place in the bill. Can you take us through as to what the bankers are thinking about when it comes to this aspect?
Now that the promoters are out of the game, now that some of these people who could probably influence the whole resolution game, they are out of the game. So it makes the banker's job much easier. They can go ahead and seek bids from people who are impartial, who are third party, not connected parties at all, and who will be able to give them a better valuation of the company depending on the company's ability to pay back. So that is obviously a kind of a very positive method. We've seen what R. Gandhi, the former Deputy Governor of the Reserve Bank of India, said that this entire ordinance is going to force promoters to try and resolve this matter so that the case does not end up in the NCLT for IBC proceedings in the first place. We also talked to VG Kannan, the CEO of the Indian Banks Association, who said that the promoters will have a very short window to try and regularize their payments before. So the promoters have a time before their resolution bids have been submitted, so that they can ensure that the payments are regularized, and therefore they don't have to face any of these criteria that Payaswini had laid out for us. We also spoke with G. Padmanabhan, the non-executive chairman of Bank of India and also a former ED at the Reserve Bank. He said that the people who have been trying to play the system in all of this time, they will be taken care of. They will not be allowed to participate in this whole process, and therefore the sanctity of this whole process will be ensured.
And in addition to that, SBI Chairman Rajneesh Kumar said the amendments will not have any impact on the number of bidders who want to participate in the bidding process for such stressed assets. Let's hear him out as well.
There is a lot of interest in these assets, so it will not bring down the valuation. Let us be very clear, because this valuation has nothing to do whether existing promoters are allowed to bid or not allowed to bid. The asset will go only on its fair value of the enterprise.
And Shardul Shroff, the executive chairman at Shardul, Amarchand and Mangal Das, says the promoters of stressed firms can bid for their assets only if they pay a total overdue amount due to the banks.
He can if he pays overdue amount, which is basically not necessarily principal, the full of entirety. There may be a portion which is still due in future. Unless it is accelerated, unless all of it has become payable immediately, then there is no chance whatsoever. But if only a part of the overdue amounts, as in principal or interest or cost, which are usually part of a legal notice, if that is quantified and the promoter pays up that amount, then he has a scope of going under a resolution plan and seeking deferral on the basis that I want the company to be viable.
Okay, so let's go in and take a check of the rupee and the bond. Saloni Dhanuka, also popularly known as Saluka in our newsroom, joins us on the show. Saloni.
Agam, the rupee yesterday recovered sharply by 34 paise to end at 64.57 levels against the dollar. Now the home currency strengthened after local market equity ended higher for the 6th consecutive session, while bearish dollar overseas on the back of dovish Fed minutes largely supported the home currency. So, and remember that so far this year rupee has appreciated more than 5%. Now on the global front, dollar index trades steady at 93.20 levels, while the common currency euro rebounded sharply after Eurozone manufacturing and services activity jumped to its highest level in over 17 years. Now remember, euro is trading above the 1.1850 levels against the dollar mark. Now moving on to bond market, bond yields rose for the 3rd consecutive session yesterday, and it hit over 7% mark intraday ahead of the 15,000 crore government bond auction which is scheduled for today. However, it ended 3 basis points higher at 6.99% yesterday. And lastly, global funds increased their rupee debt holdings for the 3rd consecutive session yesterday. They infused close to 50 crore according to NSDL data.
Thanks for that, Saloni. But we'll move on, and Reliance Jio is now slowly gaining market share from its peers, according to the latest data from TRAI. Somit Sarkar is here with us to give us a picture of what exactly is happening when it comes to the telecom market share. Somit, over to you.
Good morning, Agam. Now, TRAI came out with this adjusted gross revenue numbers yesterday evening, which helps us to calculate the revenue market share of telecom companies. Now, according to this data, Reliance Jio, which reported its revenue for the very first time, has been able to grab a market share of close to 14% in the 2nd quarter of financial year 2018. While bigger players like Airtel, Vodafone India and Idea Cellular, their market share stood at around 28.8%, 20.5% and 17.3% in the 2nd quarter of financial year 2018. Now other players which are the smaller players like Arcom, Aircel, MTNL, SSTL and Telenor, their revenue market share stood at around 9.1%, while that of Tata Teleservices and BSNL stood at 5.4% and 5% in the second quarter. Now the top three telecom service providers in India, that is Bharti Airtel, Vodafone India and Idea Cellular, saw a sharp sequential decline in their market share. Bharti Airtel's revenue market share fell by around 475 basis points, while that of Vodafone India and Idea Cellular declined by 353 and 362 basis points in the second quarter. Now Airtel's market share fell below 30% for the first time in at least 15 quarters. Idea's market share stood at around 17.3%, which is the lowest in the last 13 quarters, while that of Vodafone India stood at around 20.5%, lowest in at least 15 quarters. Now adjusted gross revenue, which is the gross revenue adjusted for interconnect usage charges and other deductions, declined for most of the telecom companies except for Reliance Communication. Surprisingly, Reliance Communications adjusted gross revenue increased by 11% to 828 crore rupees. Now for the top telecom players, that is Airtel, Vodafone and Idea, their adjusted gross revenue declined in the range of 10 to 14%. Now one positive thing was that the telecom sector, overall telecom sector's revenue increased sequentially for the first time in the last 5 quarters. Now the sector revenue grew by around 4% to 30,755 crore rupees in the second quarter. Now this is after 4 consecutive quarters of decline. Now this 4% jump in the revenue was also the highest in the last 10 quarters.
Well, thanks for that, Somit, but we'll move on, and this time we'll move on to the stock of the day. Jwalamukhi Investment Holding has exited from AIA Engineering. Nikki Mirchandani is here to tell us about what this means for the stock. Nikki.
Jwalamukhi Investment Holding has a sold off stake in the company. It has sold as much as 12 lakh shares of the company, or 1.3% stake that it holds in AIA Engineering. Now these shares have been sold at a price of around 1,446 per share, aggregating the total 1.3% stake at a worth of around 175 crore. Now the company with this sale has completely exited out of the stock. It held around 1.3% stake in September 2017 filing. Just to give you a little background about Jwalamukhi Investment Holding, it's an investment arm of private equity firm Westbridge Capital, which is a highly experienced investment firm, as we all know, and manages an asset of over $1.2 billion of capital. So what has led to the exit, from what I gather, is the weak Q2 show and also a little pessimistic management guidance which is coming through. If you look at the Q2, they have high raw material prices, currency volatility, and also a bid to get new customers, and the pricing related to that has weighed down on the margins of the company. Now the EBITDA margins have declined in Q2 to 20% as compared to a figure of 30% that we saw in the corresponding quarter of the previous year. Besides that, the net profit also came down 23% year-on-year basis. And the important key takeaway here is the management revising the guidance from sales volume guidance for entire FY18, which has now been revised to 2,25,000 or 2,30,000 ton from a number of around 245 and 250,000 ton earlier. If you look at the shareholding pattern, where still promoter holds 62% of the overall shareholding in this company, and the public stake currently stands at around 38%. What the company AIA Engineering is all about, it's a high chrome casting producer which has a market capitalization of around 5,000 odd crore.
Thanks for that, Nikki. We'll move on, take stock of all the stocks which are in the news. Shraddha Babala joins us to give us more details. Shraddha.
To start off with CG Power and Industrial Solutions, which is bagged an order of 111 crores from Indian Railways. We're also tracking Skipper. Now for this company, the board has given an in-principle approval to enter into a joint venture for a drip irrigation business with an Israel-based company. Now Skipper has said that the drip irrigation business in India holds tremendous potential given the current domestic size that has been estimated about 5,000 crores. So they expect this JV to become one of the significant players in this business. The detailed terms and conditions have not yet been decided, but we will keep an watch on that name. We're also tracking earnings that came in after market hours. Two numbers, and both were weak. Star Paper Mills, where revenues fell 3.4% and net profit came down by 6.4% on account of a lower EBITDA of 18.4 crores versus a number of 19.1 crore last year. Margins were more or less steady around the 22.6% mark. There's also a smaller company called Kesar Terminals Infrastructure, where the revenues fell 7% and net profit fell by a larger 18%. That's because of weak operating performance, where margins dropped almost from 61% to 50%. And lastly, we're also tracking Syngene on the back of bulk deals, where Geolink Fund bought about 0.8% stake in the company yesterday, whereas Steadview Capital Mauritius sold about 1%. So these are some of the names that we're tracking, Agam.
Well, we will be watching out for all those names, Shraddha. Thanks for that. But moving on, famous Japanese fashion brand Uniqlo's owners, Fast Retailing, has applied for approval to open stores in India. Fast Retailing submitted its applications on Tuesday and seeks to do business in India under its subsidiary Uniqlo's brand name last month. Fast Retailing forecasts that international sales for its Uniqlo chain will exceed the sales in Japan this fiscal year and has been pushing to expand overseas. And in a boost for Prime Minister Modi's Make in India campaign, PSA, the maker of Peugeot and Citroën cars, plans to spend about $1.2 billion in India. A person familiar with the development told Bloomberg Quint that PSA is looking to build a car factory and an engine plant in southern India after its initial efforts to make a mark in Indian markets. Failed PSA has been planning to re-enter the country, where a unit Maruti Suzuki and Hyundai control combined 67% of the market share. And the Apex Court has ordered fresh auction of Sahara Group's Ambi Valley property. A 3-judge bench headed by Chief Justice Deepak Mishra directed official receiver to oversee the auction as well. Arpan Chaturvedi, who has been tracking this case, sums up the developments in this report.
Well, what the Apex Court has done is that they have ordered a fresh round of auction for the Ambi Valley property of the Sahara Group. They have also appointed the official receiver, which will coordinate with the official liquidator of the Bombay High Court and the company judge, who have earlier, by court's order again, were asked to look after the auction process and ensure that it goes on smoothly. Now remember, this order to auction the Ambi Valley property is in furtherance of an earlier court order where Sahara Group was ordered to pay above the tune of 40,000 crores to the investors. The amount of the money which would come from the Sahara Group would first be deposited to the SEBI Sahara account, and the money now, once after the auction is, as and when it's complete, will also be deposited in the SEBI Sahara account. There were also some pretty harsh words coming from the Supreme Court to the Sahara Group. The Chief Justice of India led bench again warned the Sahara Group that if any obstructions are created in the auction process, they will send Mr. Subrat Roy to jail and end the whole SEBI Sahara case. That is what came out from the Supreme Court. These two major developments: one, fresh round of auction starting from December, and second, some pretty harsh, strong warning for the Sahara Group and Mr. Subrat Roy.
Well, thanks for that and bringing us those details, Arpan. But moving on, Somit Sarkar is once again standing by to give us an idea of all the brokerage calls for the day. Somit.
So on brokerages, first we have a CIMB on Hindustan Zinc. Now they've initiated coverage on this stock with a reduced rating and a target price of 251, which suggests a potential downside of 20%. Now according to the brokerage, zinc demand supply balance could turn to surplus in 2018 from a deficit in the earlier years. Now the zinc fundamentals are weakening on the back of this, and given the surplus that would come in 2018, prices could fall according to the brokerage. Now Hindustan Zinc's FY19 EBITDA growth will decelerate on the back of this, but there also the volume growth that will come in will not be able to offset the price decline that is expected to come in the calendar year 2018. Now they're expecting metal production to grow at a compounded annual growth rate of 8% from financial year 2017 to financial year 2020, which will drive the EBITDA growth of the company at 6% and 4% in financial year 2018 2019 and financial year 2020. Now they're expecting the company to remain in the net cash position for a period of financial year 2018 to financial year 2020, and they're expecting the dividend per share to remain at elevated levels of around 25 rupees per share for the from financial year 2018 to financial year 2020. Second we have is Motilal Oswal on Bata India. Now they have downgraded the stock to a sell rating from buy, but have maintained the target price at 578, which suggests a potential downside of 23%. Now they have downgraded the stock on the back of the rich valuations of the company. Now with GST netted off from the top line in the first half of financial year 2018, they're expecting the growth for the second half to be around 6% compared to last year. Now they are saying that premiumization will support margin expansion of around 70 and 100 basis points in financial year 2018 and financial year 2019. Now they're saying that the company's store expansion plans are on growth, but its same store sales growth are muted. Now for the second quarter, it remained around 4%, which brought down the SSG for the first half to 6%. First half to 6%. Now they say they have cut the revenue estimates of Bata India by 4% and 6% for financial year 2018 and financial year 2019 to factor in the weak first half of financial year 2018. However, they're expecting the company's revenue and net profit to grow at a compounded annual growth rate of 9% and 19% over FY17 to FY19.
Well, thanks for that, Soumit. Of course, we will be watching out the reactions on those stocks, but there's lots to talk about over the course of the day, and you will find live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Lotte has decided to acquire 100% shares of Havmor Ice Cream, and the company said in a statement post the acquisition, Lotte will start its ice cream business in the Indian markets. And Swissquote Bank SA upped its cryptocurrency game with the release of an exchange-traded product that will attempt to curb volatility by switching holding between Bitcoin and dollars. The Switzerland-based online trader called its offering the first actively managed Bitcoin certificate. And Prime Minister Narendra Modi will address 8 rallies on November 27 and 29 in different parts of Saurashtra and South Gujarat, where polling for the first phase of the assembly polls will be held on December 9. And with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned in the Bloomberg Quint.